Jonathan, very comfortable beat for Bank of America, not just on the fourth quarter for net interest income coming in at 14.36. So that's a very comfortable beat, but it's about the guidance. For this current quarter in Q1, you're looking at 14.5 to 14.6. You then accelerate through to the fourth quarter of this year. So this is a progressive story on incrementally building on steeper curves on net interest income. By the fourth quarter, you're looking at 15.5 to 15.7. So that's the net interest story. In terms of the bulwark of the bank, fixed income, FICC, we saw a pretty good showing yesterday for the others, 2.48 billion. That is a beat. Equities pretty much, I would say, at the money, if not just a bit lighter, 1.64 billion. The street had penciled in 1.69. And we're not in a hurry for provisions either. Provisions for credit losses, 1.45, Jonathan. That's less than expected. So you have three legs to the narrative of this stool from Bank of America, which is about steady and growing NII, a very well-functioning investment bank in terms of FIC. And as we've heard yesterday, this sort of low point of where we are in provisioning for a tougher time in the economy. One line from them is that the consumer client spending continue to grow at a moderate pace. Jonathan.
Manus, Cranny, thank you. The stock is up by 2.4%. Do they look good, these numbers, from where you're sitting?
They look more than good. Let me tell you something. They never really give this much of a guidance. And you're seeing Bank of America now saying not only are they going to make more net interest income, by the fourth quarter, they're going to be making $1 billion or more in quarterly net interest income by the end of this year. So that is how confident they are. This is due to loan growth. It's better deposit pricing. And it's also, remember, that roll-off of the securities that they held at low interest rates now going into higher interest rates. So this is a Bank of America sweet spot. They're also coming in with a lot of records at their trading desk, which shows they're still competing with the big guys here and keeping a handle on risk. We talked about this yesterday. The equity markets, you're seeing the banks take on a little more risk and maybe leave some dollars on the table because of it, because of the volatility.
I was going to say, usually in this earnings season, we disaggregate the Bank of America's, the more consumer-focused ones versus the Goldman Sachs. Now that we have Bank of America in hand, is there a clear advantage to either business model?
You know, that's the other sweet spot we're looking at. Main Street businesses are doing well, and so are Wall Street businesses. Usually you lean on one or the other, and Bank of America is showing that they're doing both.